They tell you inflation is normal, debt is necessary, bailouts are for your protection. But these exact excuses were used by Roman emperors, by medieval kings, and by modern governments to quietly drain wealth from their own people. And once you see the pattern, you can't unsee it. Governments love to tell you they are working for your financial freedom. They talk about stability, growth, opportunity. But if you look closely at history, you'll notice something much darker beneath the surface. Again and again, governments have used hidden financial mechanisms to quietly take wealth from ordinary people while concentrating power and money at the very top. And here's the part most people never realize. These tricks are not new. They have been recycled for centuries, rebranded, renamed, repackaged. Different eras, same playbook. The goal never changes. Transfer wealth upward and keep the majority dependent. Let's start with the oldest and simplest trick of all, inflation. When a government spends more money than it can collect through taxes, it faces a choice. Option 1, tell the truth, raise taxes openly. That option is politically dangerous. So governments usually choose option 2, quietly reduce the value of the currency. No announcement, no vote, no consent. Every coin, every bill, every savings account loses value. Ancient Rome mastered this tactic. In the 3rd century AD, Roman emperors were drowning in military expenses. Instead of raising taxes, they began reducing the silver content of the denarius. At first, the change was subtle, almost invisible. But over time, a coin that once contained nearly pure silver became mostly copper, with only a thin silver coating left. Officially, nothing had changed. In reality, everything had. Prices exploded. Savings evaporated, wages fell behind. It was a silent tax on the population, a trick still used today, just executed by central banks instead of imperial mints. Move forward to the Middle Ages, and the trick evolved. This time, it was forced loans. Kings across England, France, and Spain leaned heavily on wealthy merchants and guilds. Lend money to the crown, they said. These loans were not voluntary. Refusal meant fines. Confiscation, sometimes prison. Repayment was promised. Interest was mentioned, but repayment was often delayed, paid back in devalued currency, or never happened at all. Wars were funded. Palaces were built. Merchants had no choice but to surrender their capital. Coercion, disguised as patriotism. And it worked. For centuries. By the 17th century, the financial system itself became the trick. In 1694, Britain created the Bank of England. Not out of generosity, the government needed money to fight wars with France. Wealthy investors bought government bonds. In return, the crown guaranteed interest payments. On the surface, it looked fair, until you ask one simple question. Who paid for that interest? Ordinary people. Through taxes on everyday goods. Salt, beer, cloth. The wealthy earned safe, guaranteed returns. The poor paid the bill. A wealth transfer system, disguised as national finance. A pattern that still exists today. The safest investment on earth is lending money to governments. And those returns are always backed by one thing, your labor. Fast forward to the modern era, and the tricks are everywhere. Take deficit spending. Governments borrow massive sums by issuing bonds. Politicians promise jobs, infrastructure, social programs. But much of the money flows elsewhere. Defense contractors, corporate subsidies, financial bailouts. When the debt comes due, spending at the top is rarely cut. Instead, taxes rise. Currencies inflate. Public services shrink. The debt was sold as being for the people, but the burden lands on their shoulders. Then there are bailouts. In 2008, banks took reckless risks. They packaged toxic mortgages. They nearly collapsed the global economy. Who paid the price? Taxpayers. Trillions in public money saved private institutions. And who emerged stronger afterward? The same banks, bigger, more concentrated. Profits were privatized. Losses were socialized. And the public was told this was necessary. Even pensions are part of the illusion. For decades, people paid into government retirement systems, trusting the money would be there. But most governments never saved it. They spent it immediately and replaced it with promises. Future taxpayers would cover the cost. A generational Ponzi scheme, wrapped in official language. When demographics shift and systems begin to fail, reforms arrive. Benefits shrink. Retirement ages rise. Inflation erodes payouts. Notice the pattern. At every stage, perception is the weapon. Inflation is called growth. Debt is called investment. Bailouts are called stability. Cuts are called reform. Language hides reality. A steady transfer of wealth from many to few. In recent decades, the tricks became even more sophisticated. Consider quantitative easing. After the 2008 crisis, central banks created trillions of dollars out of nothing. They bought bonds. They stabilized markets. Asset prices exploded. Stocks, real estate, bonds. But who owns most assets? The wealthy. For average households, the benefits were minimal. The costs came through higher prices and distorted markets. The system was saved for those at the top. Another quiet trick is stealth taxation. Instead of raising income taxes, governments rely on inflation. When prices rise faster than wages, purchasing power disappears. You feel richer on paper, but poorer in reality. Inflation reduces government debt. It destroys personal savings. This is not an accident. It is policy. Then there is regulatory capture. Rules are supposed to protect the public. But history shows something else. Industries influence regulators. Railroads, oil, finance, technology. Better to own the referee than fight the game. The public sees protection. Insiders see profit. War finance follows the same pattern. World wars were funded through patriotic bonds. Citizens believed they were helping their nation. The wealthy saw risk-free returns backed by future taxes. Modern wars follow the same script. Temporary emergencies, permanent debt. Finally, there is complexity itself. Tax codes thousands of pages long. Budgets filled with jargon. Financial instruments few can explain. Complexity becomes camouflage. If you can't see the transfer, you can't resist it. So why does this matter now? Because the tricks are accelerating. Inflation eats savings. Debt explodes. Bailouts repeat. The system demands more work for less real wealth. History's lesson is simple. Different ages, same mechanism. And the harsh truth? Most people never escape these traps because they don't recognize them. Ignorance is the final trick. Financial education is resistance. Economic history is a weapon. If you know the tricks, you're harder to control. History doesn't repeat. But if you don't understand it, it will crush you anyway. The same tricks that emptied Roman wallets are draining yours today. The only question is, do you see them in time? And that's the moment the ledger outvotes the ideology. Chronofinance, following the money through time. Subscribe for more. History isn't over, it's just underwritten.